In this chapter, we'll discuss about financial statements. So just like school students get a report card at the end of the year, companies also have a financial statements that tell how the company has performed during the year. Right? It is a report card on the performance of the company during the year. So how much sales the company has done during this year, how much profit it has made, did it take any loans from banks, how much money it spent on buying machinery, and so on. Right? All the transactions are summarized in financial statements. So financial statements are a formal record of the financial activities and position of a business. There are three basic financial statements for any company. One is profit and loss account, balance sheet, and cash flow statement. Profit and loss account is also known as income statement. What it shows is how much net profit the company has made during the year, and it's working. That means it lists all the incomes, when it lists all the expenses, and the difference is profit. So profit and loss account will show what are the various incomes the company has earned during the year on one side, and on the other side it will show what are the expenses the company has incurred during the year, and the difference between those two will be the profit for the company. Balance sheet shows the company's position, financial position, as on a particular date. Right? It shows the company's assets and liabilities as on a particular date. The difference between profit and loss account and balance sheet is, profit and loss account is a statement for a period, usually 1 year. So when there is an item called sales in profit and loss account, it means sales for that year, for that full year. Say we are talking about financial statement, profit and loss account for the financial year 2017-18. It means financial year means April to March. Financial year 2017-18 means April 2017 to March 2018. So when we say sales in profit and loss account, it means sales the company has made during the 12 months period April 2017 to March 2018. Whereas balance sheet is the figures appearing in balance sheet are as on a particular date. So when we say term loans, that is loans the company has taken from bank, that item will appear in balance sheet. That item is on a particular date. Say the bank's loan the company's available is 10 crores. 10 crores as on March 31st, 2017. So that will be the position as on that date. Tomorrow, on the very next day, say on April 1st, 2017, if we draw a fresh balance sheet, the position could be different. The loan need not be 10 crores, it could be 9 crores. The company has repaid 1 crore. So balance sheet is as on a particular date, whereas profit and loss account is for a period. The other statement that is important is cash flow statement. It shows the inflows and outflows of cash caused by the company's activities. This is also for a period. You need not get into more details regarding these unless you have finance or commerce background. In that case, we have a separate book titled Balance Sheet Analysis and Credit Appraisal for Bankers. Please go through that if you require. Now here we are showing some sample financial statements. This is a sample profit and loss account, and this is a sample balance sheet. You need not go into the formats and all. That is not required for you. Just understand what are the basic financial statements and what do they tell us. So the questions in this chapter that you need to prepare are: what are financial statements? Name some financial statements. What is the profit and loss account? What is the balance sheet? What is the cash flow statement? What does the profit and loss account show? What does the balance sheet show? And what does the cash flow statement show? All those we discussed.